Hello everyone and welcome back to the channel. My name is Brent and in today's video we're going to be doing our stock market weekly recap for the 29th of November to the 3rd of December. We're in the final month here of 2021. So in this video we're going to go over 5 things. We're going to go over number 1, the overall performance of our M1 Finance portfolio. Number 2, we're going to go ahead and take a look at the weekly performance in comparison to the 4 main indexes, the S&P, the Nasdaq, the Dow Jones, and the Russell 2000. Then we're going to go ahead and jump into number 3, cover the activity, our past buys, our sells, our dividends here that we recently made and received. Then we're going to go ahead and update our current portfolio dividend income, go over, the change there that we've made over the past couple buys. And then exactly what are we buying going into the following week here on the 6th of December 2021. You know what, we have like 3 or 4 weeks remaining here in the year, so I'm pretty excited to kind of see where this market exactly takes us. So if you guys are brand new here to the channel, definitely go down below, hit the red button to subscribe, make it gray, hit the bell to be notified every time I release a brand new video. And of course, give this video a thumbs up, make it blue. And of course, if you haven't checked out my last video there, basically, if you haven't yet maxed out your IRA or Roth IRA for 2021, this be a good reminder to go ahead and do so. So let's go ahead and kick it off by jumping into the video. So let's go ahead, head over to the M1 Finance, and we're going to look at the overall performance of the portfolio. Now, we have had a bit of a pullback. We're still kind of staying up in that range here, but we did hit some highs here of about 41,446. So we're down a little over $1,000 since those highs, but that's completely fine. The market this week was a bit rattly. So let's take a look at our top 3 and our bottom 3. Our top 3 look to be remaining the same. We have Apple up nicely, Lowe's in the middle, and Main Street Capital. These two have been battling out there for a while. Looks like Lowe's has got a nice little lead on Main Street Capital. Wish I'd put more into Lowe's, but dang it, it's okay. Look at this. It's got $626 in gains versus, I had probably, $300 invested in that. I probably just put a one-time chunk and just never invested into it again. Then we have Main Street Capital. We have Pfizer. This one's been blowing up here lately. Pretty crazy. I did take a bit of profits way back when. Then they sold off a bit. I rebought back into them a little bit heavier, and that has been working out fairly good for the Pfizer buys there. Then if we go down to the bottom, we have a new one to the bottom, negativity list. Generally, we had Clorox in the negative down here. We had Hormel Foods being in the negative, and we had Colgate. These all seem to be kind of coming off their lows. So if I jump into Clorox here, for example, and we can kind of see overall here, I hadn't invested a whole lot into them. Then I invested a bit of a chunk there, $2,000. And then since my initial investment, it's been kind of trending within this range. It kind of trends. It did kind of hit a little bit of a higher peak than where I initially invested, but it's been kind of trending in this range, and that's completely fine. I don't expect much out of Clorox. I kind of bought it here on a dip, and it's only down $165. This return right here isn't correct, so I'm not worried about this return. If I put $2,000 into here and it's down 25%, that would mean I was losing $500, I think, somewhere around there, a quarter of my portfolio. So this is the incorrect return right there. So I'm just going to go ahead and hold it. No biggie right there. And if we take a look at Hormel Foods, this one's been kind of recovering, right? I've been adding chunks into here every bit and kind of averaging into it. It's kind of trending in this area right here. It's only down nearly 7%, about $100. So again, not a big deal there. It's collecting dividends. I think I make 10 or so dividends every quarter. So going forward, I'm going to make about $10 to $11 in straight dividends every quarter. So it'll kind of make up for it's just trending at the moment. Colgate had also been in the negative for quite a bit. But this one, again, is just a slow trender. I don't expect much out of these at the moment. These are more conservative, just general long-term buys of great solid companies. And they don't lose a whole lot. They don't gain a whole lot, but they just kind of hold their value and collect dividends along the way. Merck here, I'm really surprised with Merck. This one, I'm not going to be buying any more of this one. I'm just going to go ahead and let it hold, but we are earning quite a bit of dividends. It's a buy here in 2021. We've got about 26 dividends from this one. It's only down roughly 6% or so. Looks like it's kind of pulling back here slightly, but no big deal. I'm going to go ahead and just let it hold. And that is the newest to our negative pile down in there at the bottom. A few other positions kind of towards the bottom here. We have Siggy. That's an insurance group. Lockheed Martin. I kind of bought that one. I bought a bit more of that one here recently, and it looks to have been picking up. And a few others, but yeah, overall, pretty happy with the performance overall. Now, jumping over into the 1 week performance. There we go. And 1 week wise, we're down 1.59%. Now, when we compare this to the market, let's take a look at the S&P 500, down roughly 1.22%. So we fell a bit faster than the S&P 500. And if I look at the performance here, let me go ahead and look at this. Yeah, so we fell a lot harder on Monday, Tuesday, Wednesday. So Monday, Tuesday, Wednesday, we had all negative. So Monday, Tuesday, and Wednesday, our portfolio had been trending down. And then on Thursday and Friday, our portfolio had actually recovered a bit more. So here we have, what's this, Friday? I believe is the 4th. Let me see here. Saturday is the 4th. So Friday, we were positive on Friday. If we look at the 1 day here, we were up by 0.7. So on Friday, when the market was down, we had recovered slightly on Friday. We had recovered slightly on Thursday. So yeah, it's just those Monday, Tuesday, Wednesdays where the portfolio took a bit harder of a hit. And we didn't quite recover until Thursday, Friday. We might see some recovery into the next week, but that's okay. We're just looking for some opportunity out there in the market. And then our best performers and worst performers this week. So we see Apple up very nice. You know, a lot of the tech companies, I saw Facebook got hit pretty hard this week. But Apple did really well at 3.21, Cisco up 2.85, Avi up 2.01%. Then the main section, the main industry or the main area here that I thought being pretty positive was utilities. So the sectors, yeah. The sectors of the market, you know, there's a lot of red out there in the market. Now I'm looking for a specific sector that is mostly green. And if I look over here at utilities, we see quite a bit of green percentage-wise. Yeah, look at this. If we see these just utilities and regulated electric, it's all positive. There's no negative in there. There's a couple negative in the diversified utilities area, but general utilities, you know, regulated electric, that's pretty positive. So it looks like people are kind of moving maybe some cash into some of these utilities, just kind of have a buffer in their portfolios. So I did see a little bit of those guys in here doing pretty positive here towards the top. Southern Company, and I think we have UGI in here as well as the oh, it's down this week. So UGI Corporation down 2.38%. So let's see here, top or so, and then we have our worst performer. So this is what dragged Merck down into the negative. So I don't know what kind of news popped out there. If I click into here, I may be able to see some potential news. Merck sell-off is an overreaction. So that's something that just came out here on the 3rd. And Merck to supply Government of Canada with 1 million courses of its pill. FDA approves Merck's medicine. Looks like it's for something else. So yeah, this article here says it's a bit of an overreaction. I'm not worried about it, Merck in the short term. Just gonna let it go. It's only down slightly here in the portfolio. Let's go back to our portfolio and check out what else was negative. So yeah, down 7.35% in a week. That seems like a pretty good, you know, buying opportunity if you guys are looking for Merck. Innovative Industrial Properties. This is the REIT. Walmart. That's a pretty good hit for a Walmart. Down 5.10% in a week. So that's pretty interesting with Walmart. And then a lot of mixture there in the middle. Now, as far as number 3 here, our activity, I did not buy anything on the 29th of November. So on that final week of November, I didn't buy anything here. We can see that the last time that I bought anything was back on the 22nd. And at that time, I had bought some Cisco Corp. So since then, I haven't bought anything else. Let me go ahead and bring this up and see what has happened with Cisco since I've been purchasing it here. So let me go ahead and bring this in here and go ahead and throw that and get rid of some of these things here down towards the bottom. Throw in the yield in just the last 3 months or so. Yeah, so we see that Cisco has hit a bit of a hit right here. It's priced at $69.98 right now, so I had bought it at 74. So it did continue to fall back a bit more, but it looks like it's kind of bounced. So I bought it up here, it looks like. Yeah, it had fallen off a cliff right here. I thought it'd be a pretty good, interesting, opportunity to kind of buy just a bit more of Cisco, but it looks like it just had a bit further of a fall, and now it's kind of down in this direction in the $69 range. So where did it fall back down to? It actually fell below its 2021 support levels here. So let's look at 6 months right here. So 6 months would put it a little bit above $70. So it did break that support, but it quickly rebounded back near $70 mark. So this could, continue to buy a little bit more Cisco, I believe, in my portfolio. I think that'd be kind of good. I don't think I have a whole lot of it, so I'll probably buy a bit more of that one here, just given the opportunity. And since our last video, I've only had one dividend payout, and that was Siggy Selective Insurance for $6.20. So no, nothing crazy right there. So I'm going to go ahead and update my Cisco here. I got to update my shares. So currently on our M1 Finance portfolio, our current income was 1120. So I'm going to go ahead and just record that really quickly. And then our Cisco holding, SYY, is currently making, should be right there, $24.63 every year. So we can see here that I have to update my settings. So I just have to click on here. So if you guys are interested, this is called trackyourdividends.com. It is a completely free website for tracking your dividends. So here I just go to my shares. That shows 13.31. I now have 19.67. I'm going to go ahead and go 19.67. So we're just rounding up there. And then my cost basis is 55.34. So 55.34. Looks like I increased my cost basis. That's fine. Update my holding. And there we go. Our annual income for Cisco had been at $24.63. It is now at $36.98. That's a nice little increase right there. Also, our annual income for our overall portfolio was at $1,120. It is now at $1,132. So by buying into that Cisco last week, we increased our annual income by about $12. So that's not bad, right? It's on the long-term opportunity right there. We're just increasing our income for the long term, and this is my wife's portfolio, so she has another 30 years up until she start even withdrawing out of this thing, and everything eventually would just be completely tax-free. So we got a long ways to go. We're not looking at this short term. I just really appreciate looking at that growth. The current yield on cost, check that out. We're nearly almost a 0.5% above our dividend yield if we were just buy our portfolio with the cash, versus the yield that we're based off the annual incomes that these guys have continued to grow their dividend at. We're nearly 0.25% there, 0.5% there off our dividend yield. So that's pretty interesting there in the portfolio. So now if we take a look at our value, these should match now. 40, 140, 40, 139. So yeah, pretty close to our matching right there. The website's always going to be slightly off just because of the fractional shares. It only goes to 1/10 of a share. So, 1 and then 10th, and then it doesn't go to like the hundreds or 10,000ths of a share. So it can be accurate, but that's completely fine. You know what? It's a great website to use nonetheless. And then as far as what I want to buy, again, I want to go ahead and take a look at Cisco. That one's been kind of trending. Cisco, the food delivery guy right here. And now at Cisco Corporation, the AP switches, network equipment, all that firewall stuff. Won't be buying into that one at the moment. If we also track here, we go to Seeking Alpha. We have our portfolio kind of punched into here. Merck is going ex-dividend on the 14th. So that's not this week coming up, but the week after on a Tuesday. We're currently on the 4th of December. So we have Kimberly-Clark that is coming up on ex-dividend. You know what? I'm going to go ahead and slide this over here. And I'm going to go ahead and punch in the ones that are coming up on Dividend here, and then we'll kind of look at them together, okay? So let me go ahead and punch in anything that's coming up on Dividend. So we have Kimberly-Clark, we have Walmart. Walmart just dropped 5%. We have DLR, Merck. Realty Income is every single month. We'll still throw that in there. Cardinal Health. And then I'm not going to put anything in there for, you know what, I'm going to go ahead and go into January here. We'll go ahead and go into January. We'll just go up to like what is available here. And then we have these in order of when they go ex-dividend. So starting up at the top, the first one, that's Hormel Food. What did I mess up there? Lowe's. This was supposed to be Lowe's. Yeah, but Lowe's like way up there in the portfolio. Okay, so let's start up at the top. Let's take a look at where these ones are at. These are already in the portfolio. Generally, I like most of these. I know I've had some words. I have Kimberly-Clark, 3M, Southern Company, UGI, Cardinal Health on my watch list to kind of check out. Just kind of, you know, they're not there where they're like a focus because of what's been going on with them lately. The share price here. Let's see here. I want these in there, but I don't need these. And remove all that. And let's go 6 months, right? So yeah, Kimberly-Clark, that had a big rebound there. It took a bit of a hit going into November. Started increasing here in December. Fell pretty hard from 135s down to 130. Quickly got back up, broke through that 50-day, 200-day moving average. I mean, this could be a good opportunity to buy into that one. I will leave this one on there. All right, I'm going to go ahead and leave that there for now. And we're going to check out the next one. So Walmart took a bit of a dive. Looks like it's hitting some support down here in that range at 135. So it looks like it is bouncing off some support. Yeah, it's trended high. Then came back down low, trended high, came back down low. Walmart, another one here, looks like it could be an opportunity to buy. I don't know what happened on the dip, but I have to take a look at how much is in there in my portfolio. UGI Corporation, this one's just kind of falling under now the 200-day, 50-day moving average. There may be more for this one. You know, we see some weakness here, so I'm going to go ahead and remove UGI. That one's already on my chunk list at the moment. DLR, that one blew up here. It looks like it's kind of taken back off to some highs, so I'm not going to be buying any more of that one at the moment. Walmart, what was going on after UGI here? We had DLR. This was supposed to be somehow DLR. Throw that one in there. And oh wait, we had to remove that one. That's right. So DLR, Merck. Yeah, I'm not going to be buying any Merck at the moment. We look at Realty Income. This one took a bit of a dip. Check that out. I like this opportunity in Realty Income. So I'm going to go leave that one in there as well. And then we have Cardinal Health here, taking a bit of a nosedive. This one's breaking down pretty hard. I'm not going to be buying into this one at the moment until I see a bit of recovery here. So I'm going to go ahead and remove that one. Whoop, I also removed Cisco there as well. We're going to go ahead. We already looked at Cisco. This one is showing more weakness versus, you know, maybe I'll hold off on buying that one. You know, I see these other ones, Kimberly-Clark, Walmart, Realty Income, that are having a bit better upside potential. Avi, you know, this one's breaking out really strong. Buying it down in this 105, between 105, 110, that would have been a nice little opportunity right there, but now trading kind of back those highs. We have Hormel Foods. I already maxed that one out to where I wanted at 2,000. Lowe's, this one's at peaking level. It's second in the portfolio. And then we have Clorox here showing some signs of recovery. It is broken over that $50 moving average, and it's not kind of holding it, right? It can use this 164 as support and hopefully kind of trend in this direction. But until it kind of breaks out and maybe crosses over that 200-day moving average, then we'll have a golden cross and probably see a little bit more recovery in Clorox. But I've also added about $2,000 into Clorox as well. So I'm not going to be added any more into it. So at the moment, I'm actually pretty happy if I could buy Kimberly-Clark, just not maybe a lot of it, right? How much do I have of Kimberly-Clark? So KMB, I have a little $1,400 into that one. If I look at Walmart, Walmart, I have $600 into that one, so I could beef up my Walmart position for sure. And Realty Income, ticker symbol O. I know I have quite a bit of that one, but Realty, I have, 603. So, I mean, Realty Income is a great monthly payer. I should probably buy a bit more of that one. So I am going to go ahead and load up on these three. I'll probably, on Monday, I'll have much more to invest with versus what I have now, because we went ahead and did our video on Friday where we're investing the remaining capital that we need for maxing out the Roth IRA for 2021. So you know what? I'm going to go ahead and hold off on Kimberly Clark. I'm going to go ahead and just hold off on that one. And I'm going to buy into Walmart and Realty Income. I'm going to go ahead and take my $204 and some change here. And yeah, $204.52. I'm going to go ahead and punch it into O. What am I doing here? Okay, we're going to go ahead and punch it into Realty Income. And buy. Continue and confirm. And we're going to go ahead and buy into Walmart. I know Walmart took that nice 5% hit there. I'm going to go ahead and just buy it. Walmart, I also need to kind of beef up that position. Despite them being up 53%, you know, Walmart's a nice little trender. People are always going to be shopping at Walmart regardless of what kind of goes on here in the world. I know I shop at Walmart. It's right down the street. So yeah, there we go. Bought a bit more Walmart. So that'll max out our cash balance, be invested, fully invested here on Monday. And then we're also depositing cash into this account here on Monday as well. So we'll just have more available. Then at that time, I'll do like another check. See if I need to thin down my portfolio here at the very end of 2021. If there's anything I just do not want in the portfolio. And that could include, you know, 3M, the Southern Company, UGI, Cardinal Health. But we'll take a look more at the portfolio here in the upcoming weeks as well. So let me know down in the comment section below, what are you currently buying here in the market? Are you looking for anything specific? Are you looking for opportunity? Are you just kind of buying into what you already own? Let me know down there, and that is it. Thank you guys for watching. If you guys are brand new, again, go down below, hit subscribe to make it gray, hit the bell to be notified every time I release a brand new video. And of course, give this video a thumbs up, make it blue. If you guys have any comments for me, drop it in there as well. I always read and reply to all your guys' comments. And I will see you guys in the next video. Bye-bye.